I'm going to talk to valuation, why Bitcoin has value, and then
Okay.
how that translates into valuation today and going forward.
From a visual perspective, I think this slide's interesting, and that can kind of lead into a later part of the discussion, but maybe I'll leave this here and then you can kind of jump off on why Bitcoin might have value.
So Bitwise was very proud. 2 weeks ago, we were actually the first firm to publish capital market assumptions on Bitcoin. No other firm has actually done that. And you can certainly follow up through Rory and his team if you'd be interested in seeing what they are. But we do feel it obviously has value, and that valuation will continue to increase. And there's a couple of factors that is based on, some of the metrics that we actually look at. One, I already mentioned, there's a scarcity element to Bitcoin. And because of on-ramps that didn't exist more than 2 years ago, the consumer has much more access and much more ease to go ahead and incorporate Bitcoin into the overall construct of their portfolio. What I mean by that is, if we had this webinar or discussion 5 years ago, really only access to Bitcoin was to do it at your kitchen table, on a computer or on your phone, and through a hot wallet. The SEC approved 10 spot Bitcoin ETFs in January of 24, January 11th to be specific. And fast forward today, 18 months or 19 months since then, collectively, they have been the single largest raise up in ETF history. So the on-ramps and being able to include it in the overall construct of a portfolio has definitely been a driving dynamic and has created a major imbalance between new supply and demand, which I'll get to in a second. Number two, Bitcoin does have a utility, in some cases, unlike gold, right? So as I mentioned, folks look at this as digital gold. Why would people buy gold? Perhaps they're worried about a devalued dollar. Perhaps they're worried about inflation, but you can't send gold globally transmitted across the border. Bitcoin basically solves, in a lot of cases, the same thing gold does. So it does have a utility, it does have a store of value to it. Unlike gold, you can actually make global transactions, as I referenced, in a very efficient.
Yeah, but I'm curious about that. Could you speak to that more? Because the thesis for gold is an inflation hedge. So I'm interested in your thoughts on cryptocurrency or Bitcoin as an inflation hedge, but then also gold has been a kind of non-correlated asset to the traditional stock, bond, cash portfolio. Can you speak to Bitcoin there as well?
Just like I think folks in a lot of cases look at Bitcoin similar to gold, right? It can be a hedge against inflation. And I think that's reflected in the fact that currently 185 publicly traded corporations now have some allocation to Bitcoin on their balance sheet.
Do you see that really jump because of now ETFs and the ability to access, or was that occurring well before the creation of ETFs to be able to easily purchase Bitcoin?
I think that's a dynamic, but I think there's a bigger dynamic. So this year, the accounting rules changed for corporations. And simply put, the Financial Accounting Standard Board actually changed the way corporations can treat Bitcoin on their balance sheet. Prior to the change, it was break even at best, meaning if you had a purchase of Bitcoin and it declined in value, you actually had to mark it down on your books to whatever that current value was. But if it actually went back to purchase price or even exceeded purchase price, you were capped at purchase price. So you could only carry that on your books at purchase price or less. They changed that into 2025, where now you can mark to market each quarter. So if it does increase in value, it's beneficial and accretive to your earnings. In that case, it's much more attractive for corporations to hold Bitcoin. And then to your point, which I think is a good supporting one to it, a lot of these companies don't know how to custody it on their own. So they can go ahead and buy the ETF. So the ETF makes it easier for them to consume it, but the accounting change actually makes it more beneficial, if that makes sense.
And you're seeing both. You're seeing the wallet, digital wallet, and you're also seeing the ETF utilized by corporations.
Yeah, I think it's probably a combination of both, depending on the technology savvy of that particular corporation. I'll also add in another element from an institutional standpoint. You're starting to see endowments add Bitcoin to their overall portfolios. And I'll reference three because they're a little bit different. Emory and Brown University both bought spot Bitcoin ETFs. Harvard University is buying Bitcoin direct. But two Ivies in the last 2 quarters have actually added Bitcoin to their overall endowment allocation. In general, Bitcoin has low correlation, not just to gold, right? It's basically a 0.2 correlation to gold, which is not on the slide. But if you think about most US portfolios, and it's definitely worked, the S&P 500 has been a very hard benchmark to beat, not just domestically, but globally. And it's been dominated by particularly 7 stocks, which we all know which they are. And if you look at the correlation to Bitcoin here versus the S&P 500, you can see it's basically about 0.46, and that's relatively low. So in general, people are adding Bitcoin because it behaves very differently than not just the S&P 500, but also the fixed income allocation. So on the bond side of the ledger, it's actually negative. So it can be a good diversifier.
So we talked about the corporations a little bit in terms of how they're accessing it. What about the custody and owning of Bitcoin? Like, how secure is that? Maybe the differences between the wallet versus the ETF.
The security point is a really good one. And I think in a lot of cases, it comes down to the individual. How comfortable are you with the technology process and protocol and platform that you're currently dealing with? I think it's worth noting, because in some cases, I think the media misrepresents this element. The Bitcoin blockchain has never been breached. Some of the exchanges that folks actually have gone into have been breached. So that's a big distinction. Bitcoin has never been breached. Some of the exchanges you can access it on have been breached. So if you're very comfortable as an individual with technology and navigating that process of doing it on a hot wallet, or you could put it in cold storage, right, to take it off of the internet, I think that's totally fine to go ahead and do that. The benefit of the ETF is, I think, number one, you have now institutional quality custodians. The fear factor has really diminished. Coinbase Institutional is the largest. They actually custody 6 of the 10 publicly traded ETFs currently, Bitwise and BlackRock in particular. Number two, you have household names and money center banks that are now getting into digital asset custodianship. Bank of New York Mellon was the first money center bank to actually get approved to custody. Goldman Sachs is behind them. So you have pedigree firms that are actually going, down this road. Cantor Fitzgerald's another one. They were actually the first firm to actually launch a lending platform off of Bitcoin. So now in some cases, you can use your Bitcoin as collateral to actually get a loan off of that. It's really evolved in the last couple of years to being somewhat of operating in a cloak to much more transparent with institutional quality partners participating.